Advertising is back in big media. CBS, Time Warner, and now News Corp. Rupert Murdoch's company reported a fourth quarter profit of $875 million, the most in more than a year, paced by a surge in ad sales, up 29% in local television and 11% in cable. The shares are trading up this morning. For more on News Corp's earnings and what's ahead for this company, we welcome David Bank of RBC Capital Markets, one of the top-ranked analysts on the stock. David, you and I were just chatting while we were listening to Bob Diamond there, and you said you look at these results from News Corp and the other big media companies, and it feels like 2006.
It's extraordinary.
The reality, though, is that it's not 2006. Right. Is this sustainable?
Well, I mean, I think I don't expect to see double-digit growth into perpetuity, but I think from a secular perspective, something like 50% of News Corp's OI right now is coming from the cable business. We continue to expect to see a share shift to cable. We continue to expect to see a long-term secular growth trend in cable, national cable advertising. Do I expect to see an 11% for the next 10 quarters? Absolutely not. But these results have been extraordinary for all these companies.
They did highlight some cost problems in local TV, right, but the guidance was ahead of your expectations. They're looking for, low double-digit growth?
Yep.
Does that suggest that costs across the company are under control?
Well, I think what it suggests is that they are managing costs according to the new realities of the business. I think the cable business is not a fluke. We are actually seeing a secular trend. The local business is benefiting more from cyclical upside and retransmission consent, some other factors. I think they're managing expenses in that context, and I expect to see similar operating leverage coming out of the company for a while.
Operating income at most of the company's divisions was up. Right. But we did see a decline in filmed entertainment, and I was just looking at Box Office Mojo. Fox has only 2 films in the top 20 this year, and there is no Avatar on the horizon. Are we going to see some better results out of filmed entertainment, or is that just too much to hope for?
You've had the highest grossing movie of all time, so that creates a pretty tough comp. I think what we're going to see next year is a decline of something like $350 million in operating income from the film division. But again, remember, that's in the context of the biggest movie of all time. So most importantly about this, nothing different than I think the Street was expecting.
A couple of quick things we need to talk about regarding strategy. The paywall strategy.
Right.
Can you tell right now whether it's working or not?
Well, I'll tell you what I think is interesting. I don't think we know what the full paywall strategy is. We certainly know it's working for the Journal. But I do think, shockingly, strength in the newspaper business right now across the board, the UK, the US, Australia. So I think we've yet to see what the paywall opportunity is with iPad and all that, but they're getting closer to announcing something.
And one quick one before we go. B-Sky-B, do you think they're going to pony up, pay 800 pence a share?
Yeah, but not more.
Okay, well, that's what at least the board, the independent directors and the board are demanding. So you think it's going to be enough to persuade shareholders to vote in favor of the deal?
I think it ultimately will be, yes.
All right, David, thank you very much for joining us. David Bank of RBC Capital Markets on News Corp's strong results.